Hi everyone, welcome to FOREX Trading Empire YouTube channel. In this video, I'll be talking on how to simplify your daily bias. In everything I'll be explaining in this video is to show you how to simplify when looking for a daily bias, how to anticipate the next daily candle, teaching you the premium and discount array, and ICT power of 3. Before I start, make sure to like and subscribe to the YouTube channel. This is the daily time frame of Hero JPY. On the daily time frame, if you anticipate the next daily candle to know your daily bias, is to identify the premium and discount array. In the chart, you can see that I've already identified the buy side liquidity. Price took out the buy side liquidity, which is a premium array. Price took out a premium liquidity. That's a buy side liquidity. After taking out the buy side liquidity, you can see an aggressive move running this candle's low. From this swing low to a swing high. From this swing low to a swing high. Price took out the swing low with an impulsive move, leaving this fair value gap and this order block. Now, this is a premium order block. Price is trading to a discount. Now you were to identify the sell side liquidity, which is going to be a discount in price. Where is going to be the next draw on liquidity if price were to trade down, which is the sell side liquidity, the fair value gap leading to this low, which is a sell side liquidity. When you're talking about daily bias, these are one of the most effective way I've seen, and one of the most effective way I've been using to identify my bias. To identify the premium and discount array, you need to know where price is going to after what price have done. In this example, price took out the buy side liquidity, did a shift of structure, running out this candle's low, the swing low. After running out the swing low, you can see price left an order block and fair value gap. You can see the retracement to the fair value gap. As soon as price reached to the order block, you can see the reaction away. Now, the moment price trades to the fair value gap leading to the order block, you have to look for lower prices from the lower time frame, where you're going to be expecting a power of 3. From an opening price trading higher to take out the liquidity, trading down. We are looking for down close candle. Now, from the process of price trading lower, we have to look for down close candle leading to the sell side liquidity. From this current candle, we have to look for sell side liquidity, looking for down close candle. Where if we're going into the next day, we have to look for a down close candle leading to the sell side liquidity. If price takes out this sell side liquidity, and we can still identify reasons to look for price to trade to the discount fair value gap, then you look for an entry. That's one of the most effective way I see if you're to look for a daily bias, is to understand the premium and discount array and to learn how to anticipate the next draw on liquidity. Those are the key concepts you need in identifying a daily bias, even a weekly bias. So if you want to understand more on how to anticipate the next draw on liquidity, make sure to check the link in the description below to join the FOREX Trading Empire mentorship program and the community, where you'll be having a private mentor who's going to teach you through on how to anticipate the next draw on liquidity, how to identify the next daily candle if it's going to be an up close or a down close day. After identifying the next draw on liquidity, you have to see if that day is going to be an up close or a down close candle. If you can identify the next candle's high or low, it's enough to keep you profitable, because you already understand if price is going to create a power of 3 leading to an up close candle or a power of 3 leading to a down close candle. Now let's talk about the power of 3. So in a power of 3 in a bull condition, when identifying a bias, a daily bias, right? After identifying, let's say you're looking for an up close candle, the difficult part is to anticipate the next candle, if it's going to be an up close candle or a down close candle, or identifying the next draw on liquidity. But if you had to go through that process and determine your daily bias, you already know what you're anticipating price to do, if it's were to go for an premium liquidity or go for a discount liquidity. Now, Understanding the power of three is the system in which you're going to be looking for your entry, where you're looking for price to run out an accumulation or run out an opposite side liquidity, like a sell side liquidity. Price were to run out a sell side liquidity, that is going to be the manipulation phase, because in the power of three, we have the accumulation, the manipulation, and the distribution. You had to look for your entry after a run on a sell side liquidity if you had to look for an up close candle. From the opening price, you want to see price trade lower, trading to a discount. You're looking for price to trade to a discount, you have to buy at a discount. So you can see the premium and discount rate still applies to the lower time frame when looking for your entry after identifying the next draw on liquidity and to identify if the next day is going to be an up close or a down close candle. We are looking for an up close candle. From the opening price, you want to see price trade lower, taking out sell side liquidity, which is the manipulation. Price normally accumulates before the opening price or a few hours after the opening price. Then you want to see price trade lower to run out a sell side liquidity. After you run on the sell side liquidity, you want to see price push to the upside because you're trying to find your entry after the manipulation. You're looking for your entry on the lower time frame after the manipulation to anticipate price moving into a distributional phase to form a complete power of three, where you identifying the manipulation phase to the distribution phase. So in a power of three in a bull condition, we have the accumulation, the manipulation, and the distribution. And we are trying to look for entry after the manipulation, leading to the distribution. If you have to trade a distribution, you're looking for a trend continuation. Now, power of three in a bear condition. Power of three in a bear condition is after the opening price, you're looking for price to run out a premium liquidity, which is a buy side liquidity. After the accumulation, price run out a buy side liquidity, a premium price. After the run on the buy side liquidity, which is the manipulation, you have to look for your entry leading to the distribution. So price open, from the opening price, you're looking for price to trade above the buy side liquidity. Price trades above the buy side liquidity. That is when you look for your entry on a lower time frame. So if I were to put it on a time frame base, you have to look for your daily bias from the daily time frame. Look for your power of three from the 15-minute time frame. After the run on a buy side liquidity, if you have to look for lower prices, you have to look for your entry on a 1-minute time frame where you're looking for a shift or structure after the manipulation. After price manipulate takes out a premium buy side liquidity, you have to go to the 1-minute to look for an entry on a bear condition. So anticipating the next candle, if it's going to be an up close or a down close candle, is one of the most important parts. Anticipating when price is going to trade down is to apply the power of trade concept, where you're looking for price to manipulate an opposite side liquidity to create a Judas swing. You can see price trade higher, indicating that price was moving to the upside. Then you can see the Judas swing creating a fake move before trading against the move. So understanding the power of three after anticipating the next draw on liquidity is a key factor when using the daily bias or even the weekly bias. So you can go into your chart and start your back testing, learning on how to anticipate the next candle, if it's going to be an up close or a down close. If you're looking for more details on what I'm trying to explain in this video, make sure to check the link in the description below to join the FOREX Trading Empire community, where you'll be given a private mentor to teach you on how to trade using this concept which has been explained in this video. But when you are trying to get a daily bias, you just need to understand if today is going to be an up close candle or a down close candle, or what's the next draw on liquidity, where is price trading to. You have to ask yourself those questions and to see if price is leading to that direction. If you can't find a bias from a higher time frame, which means price is either going to consolidate or you rather stay away from the market to look for a day where the price is tipping its hands to you, showing you a clear bias to a specific direction. If price were to lead to an up close candle, if you're identifying an up close candle, then you are looking for a power of 3 in a bull condition. But if price was indicating a down close candle, then you're looking for a power of 3 in a bear condition. So applying those three concepts, learning the premium and discount, first you mark out your premium and discount array. Next, you anticipate the next draw on liquidity if price is going to create an up close or a down close candle that day. Then going down to the lower time frame from the 15 minutes, you're looking for a power of 3 from the opening price. For price to create a fake move going against the buyers, going into a premium price if you're to look for a bear condition or a down close candle. So that's all for this video. See you guys in the next video. So make sure to like and subscribe.